Gold prices, again, to make this 1,000% clear, I had expected gold prices to go up during this time. They're down from their highs. When they hit like a high of like 3,157 or something like that was a high, I think, around the beginning of the month. And now it's about 2,980 or something. But they're still way high, and we see it going higher. And this is important. The higher gold prices go and the more gold shines, that's going to pull a lot out from the Bitcoin world.
In today's news recap, gold drops sharply amid market panic, but fundamentals remain strong. Global markets opened the week under pressure, with major equity indices tumbling once again as volatility swept through the Asian session. The latest wave of selling follows China's announcement of retaliatory tariffs on the U.S., intensifying the fallout from last week's Liberation Day tariff shock. Investors had hoped that the worst of the uncertainty would fade following the initial U.S. tariff announcements. Instead, the reality has proven more severe. With tariffs exceeding expectations and no sign of negotiations, markets are now increasingly pricing in the risk of a global recession, beginning with the U.S. This risk-off mood has triggered broad-based liquidation across asset classes. Even traditional safe havens have not been spared. Gold, typically a beneficiary of risk aversion, has not been immune. XAU/USD has dropped more than 6% since Thursday, a move that seems to defy its status as a hedge during times of market stress. The likely explanation: forced liquidation. As losses pile up elsewhere, investors appear to be selling profitable or liquid assets like gold to meet margin calls or reduce exposure. As a result, this sell-off looks more technical and sentiment-driven than fundamental. The key factors that have supported gold remain intact, though. Looking beyond the short-term panic, the medium to long-term outlook for gold remains bullish. The current environment, marked by volatility, economic uncertainty, and central bank caution, typically favors gold. Last week, Fed Chair Jerome Powell reaffirmed the Fed's wait-and-see approach in response to the unfolding instability. This week's March CPI release will be crucial. If inflation data shows further softening, it could strengthen the case for future rate cuts, potentially reigniting demand for gold. On the other hand, a surprise uptick in inflation could limit the Fed's ability to ease, injecting more uncertainty into the macro picture. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Hey, you see what happened to the markets today? Ooh, they were way up. The Dow was up, what, almost 1,400 points, 1,400 points. Closed down over 300 points. Yeah. NASDAQ, S&P 500, they were all up, all went down. Trade wars heating up. Trade wars heating up, and where it goes, nobody knows. Two of your top trends for 2025. The wild card and the trump card. And nobody knows how they're being played. They're being played every day in a very different way. And now Trump says he's going to put 110% tariffs on something on China. And China said, we're not going to bow down to you. This thing is really ramping up. And where it goes, nobody knows. Wild cards are being played every day like we've never seen before in the history of the world in modern times. Never before. Again, two of our top trends, the trump card and the wild card, they're being played every day and nobody knows how they're going to play them. Last week, 6.6 trillion, nearly $7 trillion got wiped out of the equity markets. Today, the NASDAQ was down over 2% again. The dot-com bust is coming, and nobody's talking about that other than the Trends Journal. You're not allowed to talk about it. Again, China is going to ramp up their AI, and they don't need America to do it. So the dot-com bust, ready or not, here it comes. It's going to crash the equity markets. You see oil prices. Whew. Oh, drill, baby, drill. Oh, that was Trump's thing. They're going way down because the global economy is going way down. And OPEC Plus, what they stupidly did is they said they're going to increase their oil output because they need more money. So more oil, more supply, less demand. You see where things are going on that end. So now the United States is saying, that guy Navarro, who's the mouthpiece for Trump as far as the economy goes and trade, said that these lower oil prices are going to bring down inflation. And he's right. They're going to bring down inflation, but he says it's going to stop a recession. Well, that's not what a lot of people are saying, that it's going to stop a recession. Matter of fact, we're putting in the Trends Journal, you got one article after another. USA Today, Jamie Dimon, Larry Fink, Bill Ackerman, more of the economic outlook with Trump's tariffs, Forbes, Recessionary Tracker, one after another. ABC News, Trump's tariffs could cause a recession. Axios, the third global recession. The Economist threatens global recession. BlackRock resets recession forecast. CNBC. Again, one after another. So you got some people saying no recession's coming. Others saying it's not coming.
In today's news recap, silver price forecast. Can the market recover after its worst week since 2020? Silver posted its worst weekly performance since 2020, falling over 13% as traders grappled with deepening recession fears, forced liquidations, and a deteriorating industrial demand outlook. The sell-off reflects mounting macro stress, with trade policy under President Trump playing a central role in reshaping the demand landscape for the metal. President Trump's announcement of sweeping reciprocal tariffs and targeted measures against China triggered a reassessment of global trade flows and manufacturing prospects. Semiconductor tariffs are particularly bearish for silver, given its widespread industrial applications. China's response, slapping a 34% levy on all American goods, adds to fears of a drawn-out trade war. The result has been a sharp drop in global demand expectations, particularly in Asia and Europe, two major industrial buyers of silver. A violent decline in equities, highlighted by a 2,000-plus point drop in Dow futures, unleashed margin call selling across the board. Silver was hit especially hard as investors were forced to exit positions to cover losses elsewhere. While gold also saw liquidation, its safe haven bid helped cushion losses. For silver, with weaker monetary demand and no central bank support, the impact was deeper and more sustained. Silver's weakness was compounded by a rising U.S. dollar and an uptick in real yields. Treasury markets stabilized after strong jobs data, pushing the 10-year yield back near 3.88%. The dollar gained as expectations for aggressive Fed cuts were scaled back. Traders now turn their attention to this week's Fed minutes and Thursday's CPI report, both of which could reshape policy expectations. If the minutes signal hesitation to ease, or if CPI comes in hot, silver could face further headwinds from tighter financial conditions and a stronger dollar. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Get ready for dragflation. declining economic growth, and rising inflation. You got it. And it's going to happen. So gold prices, again, to make this 1,000% clear, I had expected gold prices to go up during this time. They're down from their highs. When they hit like a high of like 3,157 or something like that was a high, I think, around the beginning of the month. And now it's about 2,980 or something. But they're still way high, and we see it going higher. And this is important. The higher gold prices go and the more gold shines, that's going to pull a lot out from the Bitcoin world. People want that real hard asset. They don't want a digital one that you can't touch, feel, smell, hold, or anything. So we're going to see more and more of a weakness should, or when, I'm going to say, gold prices really spike, because this is a wild ride into the future. And again, you have to put it all together. And the wars are ramping up. You had that guy Hegseth a little over a week ago over in Japan said, we're going to protect Taiwan against China. Oh, yeah, right. And now China is ramping up their military drills in Taiwan. And just as we went on the air, you ready? White House spokesman Caroline Leavitt said that if Iran will abort negotiations efforts with the U.S. to sign a nuclear deal, quote, there will be consequences. I think coming out of her mouth, it's consequences. President Trump imposed crippling sanctions on the Iran regime and gave them a choice. Hey, I'm Trump. I'll give you a choice. You listen to me. I'm a spoiled daddy's boy. I got everything from my father. I got my daddy left us over $500 million worth of real estate. I didn't have to work. Yeah, that guy. Now you had Netanyahu over here. They're putting a deal together. Goes back to gold prices. They attack Iran. You're going to see oil prices go to $120 a barrel plus. It's going to crash the global economy. And it'll be the beginning officially of World War III and the end of life on Earth. Because here's what the Iranians said. Trump wants a new deal, end Iran's regional influence, dismantle its nuclear program, and halt its missile work. These are unacceptable to Tehran. Our nuclear program cannot be dismantled, a senior Iranian official told Reuters today. Quote, our defense is non-negotiable. How can Tehran disarm when Israel has nuclear warheads? Yeah, between 200 to 400 of them. Who protects us if Israel or others strike? Said another official. You got it? They're not going to back down. You got 91 million Iranians versus 7 million Jewish people in Israel. Who's going to win?
What's your take on Celente's new outlook? Do you think $3,000 gold is realistic this month, or are there more hurdles ahead? Will central banks continue to gobble up all the gold? It's funny that Gerald Celente has shifted his forecast after being bearish for like 2 weeks, becoming bullish on gold as he sees current market conditions driving prices higher. Share your thoughts and price predictions in the comments. Let's see how this plays out in the coming weeks. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.